see, guys, monetary policy, it is the most important and dynamic function of RBI, because monetary policy is something that comes that comes 6 times in a year. 6 times in a year. So it in reality is the most important, dynamic, and sensitive function of RBI. It is the most important, dynamic, and sensitive function of RBI. Sensitive function of RBI. Because you have to come up with monetary policy 6 times in a year. So it is actually a bi-monthly affair. It is a bi-monthly affair. That means after every 2 months, you come up with a new monetary policy. After every 2 months. Okay. Now, whenever this monetary policy comes, this monetary policy after every 2 months, it has a particular stance. It has a particular stance. Stance में क्या होता है? Stance means what is the monetary policy trying to achieve? That is the stance of the monetary policy. What is it trying to achieve? Generally, we have 5 or 6 stances, but the most important are the 2 important stances. So what are the stances of monetary policy? Either it can be an expansionary stance, it can be an expansionary stance, or it can be a contractionary stance. Expansionary stance or a contractionary stance. In an expansionary stance, it simply means RBI is trying to expand the money supply. That is, increase the money supply. So if RBI is trying to increase the money supply in the economy, now money supply, you understand what the money supply is. Generally, when we talk about money supply, we are talking about the broad money. हम broad money की बात कर रहे हैं यहाँ पे. Fine. If RBI has to increase the money supply, that would mean that RBI is going for expansionary monetary policy. Expansionary monetary policy. This would mean that RBI has an expansionary monetary policy. Now, if RBI is trying to reduce the money supply, that is, contract the money supply, bring it down, then we can say RBI has a contractionary monetary policy. It has a contractionary stance. So the stance of the RBI can either be expansionary, can either be contractionary, depending on what are the sentiments of the market. Market के sentiments के हिसाब से, according to the sentiments of the market, RBI can change their stance. Right now, you understand that because of the COVID, we were down there at the bottom, minus 24%, and trying to recover. Since then, we have been recovering only fine. So how is this recovery happening? It is happening because of expansionary monetary policy. RBI is trying to increase the money supply. With high money supply, there will be high demand. With high demand, there will be high supply. With high supply, there will be high production. With high production, there will be high growth. This is how RBI is helping in growth. But now we have been growing, but now the problem is not of growth. The problem is of inflation right now. Today only we got the data that India has an inflation of 14% WPI. 14% inflation is huge. It will seep into the consumer level, and consumer price index bhi badega is. So we have to face a huge inflation. Now RBI is trying to reduce the money supply, going for contractionary stance. Reduce the money supply, demand will come down. When demand comes down, prices come down. This is how RBI is trying to increase or decrease the money supply. If RBI is increasing the money supply, that would mean RBI is trying to increase the growth, expanding the growth. If RBI is trying to contract the money supply, the reason would be inflation. Now we understood the monetary policy ka function. We understood what are the stances of monetary policy, increasing or decreasing the money supply, and all those things. Now, whenever you talk about monetary policy can either increase the money supply or decrease the money supply. Increase or decrease the money supply. Now the question is, how is RBI able to increase the money supply or decrease the money supply? What are the tools that are used by RBI to increase or decrease the money supply? Tools क्या है RBI के पास? Fine. What are the instruments of monetary policy? What are the tools of monetary policy? which are used by RBI to increase or decrease the money supply. Subheading: tools of monetary policy or instruments of monetary policy. Tools or instruments of monetary policy. Now let's look at the tools and instruments of monetary policy. There are two tools, precisely we call it quantitative tools of monetary policy, and the other one is qualitative tools of monetary policy. Qualitative tools of monetary policy. When you talk about quantitative and qualitative tools, quantitative tools are those tools that regulate the overall money supply. Overall. That regulate the overall money supply. जब आप overall money supply की बात करते हैं, we are talking about quantitative tools. For example, in India, the total stock of money supply. If you want to change the total stock of money supply, you want to increase it or you want to decrease it, the total stock, that for that you need quantitative tools. You need these tools for that. But sometimes we don't want to change the overall money supply. We don't want to modify the overall money supply. We just want to change the money supply in a particular sector, let's say agricultural sector. Or we want to change the money supply in industrial sector. Let's say these banks that have the money, these banks are giving a lot of loans to these industries. And we want to change the money supply in industries. We want to pool that money and give it to the agricultural sector. So what are we doing here? We are reducing the money supply in industrial sector and we are increasing the money supply in agricultural sector. So in reality, what is happening is intersectoral allocation of funds is happening. Intersectoral allocation of funds. Allocation of funds. So funds are being allocated between the sectors. So whenever you have to do something like that, you want to decrease or increase the money supply in a particular sector, and you want to increase or decrease the money supply in some other sector, that requires qualitative tools. So qualitative tools of monetary policy are used for intersectoral allocation of funds, and quantitative tools are used for the regulation of overall money supply. Is it clear?